and it's a great time to have you, Chris, because listen, we've been talking a lot about NVIDIA. They reported, they beat, investors loved it. And when we talk about NVIDIA, Chris, you know, a theme that does come up is we know that TSMC, of course, is actually making Jensen Huang's chips, and in Taiwan, a real, of course, geopolitical hotspot. And I'm curious, Chris, for chip investors who are listening right now, should they think of that as a kind of long-term risk, Chris, that they need to be aware of, not just if you're in NVIDIA, but in a lot of names that rely on TSMC to actually make those semiconductors?
Well, I think you're right that almost the entire U.S. chip industry, all of the leading chip design firms rely quite heavily on production in East Asia and especially in Taiwan. You know, it could be a long-term risk, could be a shorter-term risk. Nobody really knows. But the fact that the entire U.S. tech sector is dependent on one pretty small island does present a risk that I think investors have to take seriously.
By the same token, there are implications for China itself when it comes to where its chips are being designed, particularly advanced chips, the kinds like NVIDIA designs, right? They're trying to sort of foster a homegrown advanced chip making industry. Can they successfully do that?
Well, you're certainly right that China is focused on this issue. We've seen China make a lot of strides at the lower and the middle range of the market, where China's probably going to be close to self-sufficient in producing lower-end chips by the end of the decade, if not slightly sooner. Where they face real challenges is at the high end, the most advanced processors, like those that are used in smartphones or used for AI applications. And China's got some volume of relatively advanced production capacity, but when it comes to the most advanced manufacturing, right now it's all in Taiwan. And that represents a roadblock for Chinese firms that want to compete with NVIDIA and AI chips or with other companies in PC processors or in smartphones.
And how much, Chris, I mean, obviously the US government, is telling chip makers, you're not sending your latest and greatest to China, but how much is that really sort of hampering China's ambitions to be a chip powerhouse?
You know, I think it's certainly a challenge for China when it comes to access to chip making tools, like the lithography equipment produced by ASML in the Netherlands, which in its most advanced versions can't be sold to China at all. That's a real hindrance to China's ability to manufacture more advanced chips. I think it's more uncertain whether the restrictions on the sale of AI processors to China is really slowing down China's AI ecosystem. It's true that we hear voices from China, people who say they face deficits in getting access to all of the AI processors that they want, but you actually hear the same things from American companies as well, who are also struggling to get their hands on all of the NVIDIA chips that they'd like to buy. So I think it's less guaranteed that those controls are actually having the desired effect.
And Chris, just quickly, the other side of the tariffs and restrictions put on China are the incentives here in the U.S. for building homegrown chip production. I know we're years away from that really being finished, but once it's complete, how resilient will it make chip supply chains?
Well, we're seeing a ton of investment happening in the chip industry in the U.S., multiple different companies, both U.S. and foreign, in a series of really tremendously large projects. And this is going to make a major difference in the U.S. chip industry. We'll be producing a lot more chips domestically. It won't mean complete self-sufficiency, but it does mean a lot more resilience, especially in case of a political crisis in East Asia.
Chris, thanks so much for your perspective. Really helpful.